You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, that music means we are back once again for Options Bootcamp, the premier options educational program. Also means it's Education Wednesday, which is one of my favorite days. I mean, they're all my favorite days on the network. I can't choose one favorite, but if I have to choose one, Education Wednesday is certainly up there because we get to hold court on good old Options Bootcamp. My name, of course, Mark Longo from the optionsinsider.com, as well as from the ever-exciting, at least we tend to think so, Options Insider Radio Network. If I sound a little bit different, it's because I'm not coming to you from our studio, and I'm actually coming to you from down the street, adjacent to the studio here at the Cboe Global HQ, where we are checking in once again for Dan's annual Mastermind class. So it should be some fun to be had here on the show. If you listen on the Pro, we're kind of doing a backdoor live today, so based on the connectivity here at the Cboe. So, of course, if you want to check out the Pro for yourselves, you know where to go. Theoptionsinsider.com/pro is the place to go to learn more. You get, of course, Options Oddities every week where we break down a whole bunch of unusual activity, usually get into a lot of fun trouble ourselves, talking ourselves into trades. We have Pro Q&A sessions, a lot of great guests. Just had Scott Nations on there yesterday holding court on all things volatility, ready and willing to tackle all of your questions, live access to everything we do. And, of course, the giveaways. You don't want to miss the giveaways for the Pro Trading Crates. Theoptionsinsider.com/pro. The place to go. As we are joined here today, I'd be surprised if he wasn't here because it is his event. The black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call Mr. P, welcome back to your own event, sir.
It is great to be here and back, and just great to be.
Doesn't seem like a year ago we were doing this, but
yeah, no, it doesn't.
Apparently, it's already been a year. This year has just flown. It's been ridiculous. I'm not mentally ready for, I'm about to say August. It's actually September. That shows you how mentally unready I am. I'm more thinking like late March, early April is what I'm thinking. But yeah, apparently it's already mastermind time, sir. So tell us, what is this? What is this mastermind? It's not just a group of evil supervillains you have amassed here. What is this? What's going on here?
Well, it's mostly a group.
Okay, no. I can see a couple. The eye patch is a dead giveaway.
So this is a really, really great event that we have once a year, and we have some of our top students here, some of our students who are really most focused on making it happen as trader. And we get together and all kind of collectively share information about what we're trading, resources that we have. We find trades together, talk about how we're managing them, and it's a real hands-on, in-person community type experience.
You guys having fun so far? Yeah? All right. I can see you in the eye patch down there. You didn't say you're having fun. We'll keep an eye on you throughout the show. As we keep on rolling and take on some of your questions, it is time for the mail call. All right, everybody, welcome to the mail call, the portion of the show where you folks take the reins, your questions, your comments, your insights. We also shine a spotlight back on you with some of our own questions of the week. We have a couple to pay off, Dan. First off, we were talking last time on the show. It was a very contentious poll we had for our audience. We've been asking this question throughout the year, every few months, to try to gauge people's sentiment. And we asked you quite simply, in these troubled times, where are you allocating the majority of your portfolio? We kept it simple. We didn't go, volatility, harvesting, or income, any of that kind of stuff. We just went the most common buckets you would normally associate with a portfolio. So you gave them cash, fixed income, equities, and then for fun, commodities/crypto. And when we asked this question back in May, I think around 43% of the audience chose cash, which was interesting, maybe not that surprising. And then when we ran it again last week, right before the end of our last show, it came out exactly tied, Dan, 35.7% each for cash and for equity. So our audience split right down the middle, and then only 19% for fixed income. I thought they would be more popular. When we did this poll last time, we didn't pull out fixed income as its own bucket. We kind of lumped it in with crypto, and everyone got mad at us. They said, what about fixed income? So we pulled it in its own bucket this time, and it got 19%. So it did better, but not quite the robust love for bonds that I thought. And then 9.5% for commodities/crypto. Mr. Dan, does that surprise you that our audience so clearly split down the middle right now, especially between cash and equities?
Yeah, it does kind of. I'm surprised to see so many people in cash. Not that it's entirely unwarranted, but I guess it's a little bit telling, really. I think people who are not familiar with options, they buy and hold, and they wait out the storm, because in the long run, you should make 10% a year, but
I was going to poll this audience, but this is definitely a different selective, a little selection bias here. I don't think anyone's sitting in cash here. If you are, you're sitting in cash, probably wait to put on your next trade. So I don't think a lot of you are hanging out in cash, even though it's juicier now than it has been in quite some time. So maybe you could see why maybe the near-term appeal is there. We also asked someone on the show last week, we said, which product has the largest overall impact on the options market? We gave them 3 choices, and the infamous other, VIX, weeklies, or daily. Let me poll you folks here really quick, because you folks are kind of on the bleeding edge of options. If you had to say, looking back on the options market as long as you've been participating in it, which of these 3 products do you think has had the biggest impact? VIX, weekly options, or the daily options/0 DT? Let's show of hands for VIX. Oh, nobody. No love for VIX. How about weeklies? All right. Oh, wow. Okay. Looks like weeklies has it. So I'm assuming you're a dailies. 1 vote for dailies. Wow. Okay. No love. Our audience was the other way. 53% of our audience chose the 0 DTE daily. I could see why people would choose that, because it's kind of the flavor of the moment. And certainly going forward, it might become the thing. There's certainly an argument for that, maybe. Whether it has so far, it's only really had a year under its belt. So it's kind of, I probably would vote for VIX, and our audience was 32% for VIX. Weeklies you guys all chose the weeklies. Weeklies came up in the rare, 15% only. I guess you can maybe think of dailies as an offshoot of weeklies too. So maybe that gets some. Dan, what are your thoughts on that? Somewhat surprising. Maybe think about it now. Everyone's obsessed with 0 DTE. Maybe not that surprising, but still somewhat surprising result here. All the love for 0 DTE.
Yeah, I feel like the hierarchy here is that historically weeklies came first and they gave rise to dailies. So I figure, if you have to pick one of those to have had the largest overall impact, you got to, pick the one generation up, the one that started all this.
There you go. Pick the granddaddy out there. And we have another fun one that's live right now. We just kind of it's a shortened holiday week. So we threw a fun poll out just for have some fun on this shortened holiday week. We said very simply, this is the name we talk about a lot on our Options Oddity show for our pro members. Oatly has become a piece of garbage now. Somewhere around $1.20. We've made all kinds of trades around it, and it's been fun/not so fun for myself and some of the cohorts to trade in and around that name. We also were joking about Nikola, how they're both trading at the time we posted this. They were both about $1.20. So it raised the interesting question of which one. You had to buy, gun to your head. You got to buy one of them right now. Let me see, show of hands, who's buying Oatly here? One guy. Okay, you like your oatmeal. The ice cream is quite delicious. I will give you that. And then so everybody else is Nikola here. All right, I guess EVs, it has popped very recently. Dan, you have a vote there before I reveal the results right now?
I'm going Nikola as well.
100% of our audience right now is going, they have no love for oat milk. My goodness. I'm with this guy. I'm going to go Oatly just for fun, just to mix it up. Because the ice cream is, the milk, but the ice cream, ridiculous. You would never tell that it wasn't dairy ice cream at all. So yeah, $2.20 garbage stocks. We just did that poll not too long ago. We were talking about unusual activity. We saw someone bought, that was Rivian. Rivian was around $2.50, and someone bought the 5 calls for August expiration, a ton of them. So the stock had to pretty much double, and of course it did not. It immediately fell off a cliff. But yeah, a lot of people, for a while there was some of this shall we say, meme-type paper. I have a bunch of questions. If you have a question of the week, we can get into it if you want, or I can get into a bunch of ours first. And if you guys here, by the way, and gals, have questions, feel free to just raise a hand. We can let you guys dive in live, too.
Yeah, I mean, I'll tell you, my questions of the week usually come from somebody asking me a question. So anybody have a question of the week?
We had good questions about Portillo's before. The answer is it's delicious. That's an easy one. Get everything. I think that's all pretty good. I can speak for the ribs. I'm not a huge Italian beef guy, but if you like it, it's supposed to be pretty good. The hot dog's pretty good, too. I've heard good things about the burgers. Never had them. So, yeah, a lot of good things there. So, just mull over your questions. If you have questions, by all means. Our audience, they're very nice. They're very kind. They won't make fun of you.
Except that one.
That one guy. Well, he's a jerk, but, hey, he knows what we're talking about. Let's go out this one. Let's go to Sergey. Sergey P. He wants to know, when is a situation when you would hold your options through expiration and into settlement? Seems like we have some questions about exercise and settlement a lot lately, Dan. That's kind of everything comes in waves, it seems like, and this is the wave for that. I have a lot to say on that. If you want to hold court first, I'll let you, sir. I've been talking a lot about these polls here. So someone wants to know, when would they want to hold their options into settlement?
A couple scenarios. One is if you have on like a covered call that you're using to trade out of your position to get assigned, you would want to hold it so that you do end up getting assigned and selling the stock. Or the same justification can be made for cash secured puts. You sell it because you want to buy a stock, which are two great ways to use those strategies, even though many people don't actually use them for that great way to trade it. And we were talking about this earlier about zero DTE options and such. Sometimes some of those I will hold till...
That almost doesn't count, though. Right? That's almost like a cheat, right? Because it's like expiration. You look at your watch, oh, they're gone. They're expired already. So, yeah, I could definitely see that use case. So that maybe that kind of gums up the works there a little bit there. But, yeah, I could definitely see. Are you guys, a lot of you trading zero DTE right now? Is that kind of what you're talking about here today? Or no? No zero DTE in here? But, yeah, it does seem that paper flow is aberrant in a lot of different ways. It's weirdly symmetrical. If you look at most big equities or indexes out there, there's going to be a lot of customers buying puts and selling calls. And so that's going to cause that skew shape you see all the time. In zero DTE, for a variety of reasons, it's completely even. It's 1-to-1 calls over puts, and it has been almost since day one. It's weird. There's a lot of weird nuances to that flow that we've never really seen before. So I could certainly see a use case there where a lot of people would suddenly be riding things through expiration that you don't want to bother taking off. By the time you hit the button, it's already expired, right? So, yeah, it's an interesting. I'm with you. I think the most common scenarios are involving stock, right? So you have the covered call, you write it. What's the first thing we say when you write a covered call, right? Be comfortable selling the stock. Be comfortable letting it go there. If you are, then you've done your homework. Let it go, and you move on to you win. No one gets that. Then they get their stock called away. They always write us very angry, but it's like, no, you won. That's a good thing. You win. So that's probably the first most common. And then, of course, the other one, of course, is expiring into stock when you sell a put to buy the stock. Those are the two. I'm trying to think off the top of my head. I don't think I can think of in recent memory a time when I bought a call and let it just go through into stock. I can't think of a time. Maybe if I just had such a home run and there's no point to sell it, just go. And maybe the bids are so wide at that point because it's in the money that it doesn't make sense to sell it. It's exercising it. That's the only time I would think that would even make sense, really,
Yeah, there's about a year ago when I did that intentionally in my IRA, just because I wanted to buy the stock, but, I was hedging not being in the stock by buying a call, and stock went up, let it exercise, and, but that was very intentional. It wasn't an after the fact thought.
Well, we all had those $300 in the money GameStop calls a couple years ago.
Oh, yes.
We all experienced that.
Oh, yes. Oh, yes.
You're not going to sell those. You're going to let those expire into stock. So, yeah, who is that? Sergey. It's a good question, but it's not a scenario that we outside of those two we mentioned, not one that we talk about very often. All right, this goes back to our last show we just did, Dan. I love when people chime in almost instantaneously, like the second the show goes live. A lot of people listen on YouTube as well. If you're one of the people who listens on YouTube, it's not a video show. You can't see us in here today, but you will see some imagery while the show goes in. So if you like watching your podcast, and a lot of people do, including this guy, Jack F. He chimed in on YouTube like the instant the show went live. I knew this would get some people excited. We were talking about pattern day trading last time. And this guy, Jack F., wrote in to say, if you get flagged as a day trader and you have under 25,000, you just switch to trading futures until you get your account back above the limit again. I remember trading this on a couple of occasions to do this. So John, you're a futures guy. Is this your recommended workaround for pattern day trading? Switch to the E-mini?
I mean, I don't see another option.
Yeah.
Pun intended.
Pun intended, yeah.
That doesn't work very often, I'm sure.
Yeah. Yeah, they know this is kind of a little bit of regulatory arbitrage here as well, right? Jumping from securities over there to futures. That's kind of avoiding, I think, some of the spirit of the law, but I think we all get it. The pattern day trading thing is has anyone here ever bumped up into that pattern day trading? All you guys have? Yeah, it's annoying. Unfortunately, like Jack F., technically this is a workaround. I don't know if your broker would be too happy if you keep doing this, but outside of getting more than 25 grand in your account, that's kind of the only other workaround. Thanks for your suggestion, Jack. We will put it out there to the audience, so hopefully not everyone's list is bumping into this. But I would imagine, for this show in particular, there's a lot of new options traders. I would imagine a good chunk of them probably don't have 25 grand in that account. So this might be an issue for them. So if that's the case, get yourself a futures account. Most big brokers, just it's another button you hit now. It doesn't, not the rigmarole it used to be. And now you have a futures account. And then you sling some E-minis until they wave the magic wand and you're good again. So there we go, Dan. We're teaching people to do edge runs around the law here on the show. Can't wait for the FINRA to knock on our door. What are you telling people to do on your show? All right, here we go. So this is more exercise and settlement stuff, Dan. Let's go to, GAIN, G-A-N-E. I'm going to say it's GAIN. If I'm mispronouncing that, I apologize. And he wants to know, I heard you mention on the network recently that there are no economic reasons to exercise an option early except for a few instances. Why is that? I thought the options were designed to be exercised at any time. And what are those instances? Thanks. Well, yeah, a lot of people have, I guess it's that time. Maybe late summer, everyone's letting things exercise. I don't know what it is. It all comes in ebbs and flows. You guys and gals are the bleeding edge of Dan's crew. Have you folks ever exercised an option early? And if so, why have you done so? It's not a very common use case, really. I mean, why can't they do it? They're designed to be exercised at any time, Dan.
Right. So when you exercise an option, you give up any time premium that you have still in the option. And so if there is time premium, you just don't want to do it. So that being said, when would you want to exercise an option? Well, if there's no time premium and you actually want to trade the stock, buy it if it's a call, sell it if it's a put. That said, with puts, market makers tend to be long stock against puts to hedge delta neutral. When those puts get very far in the money and there's very little time premium left, what they do is they exercise the puts so that they don't have to pay interest on those shares of stock that they're holding. Same thing for calls, but different. It's not interest, it's dividends. If you own a call and they pay a dividend, you don't get the dividend. So you have to exercise the call in order to get it. So those are the main reasons. I mean, there's a couple others, like maybe if the stock is really hard to borrow and you're doing a lot of hedging with the stock, like maybe you're a market maker or volatility arbitrageur, you might exercise the puts even if they have a little time premium just so that you can get short stock that you otherwise couldn't.
Yeah, those are pretty much the primary scenarios. If you're looking at who is this, gain or gone? If you're looking at a dividend, it's a pretty simple math, right? You crunch the numbers. Is the dividend more than the time premium you are surrendering? But remember, if you exercise an option, you are just selling it for the intrinsic value effects. You're losing all of that time premium. So you have to look and see, is the dividend worth more than the time premium? If the answer is yes, then it makes sense to exercise. If not, then it does not make sense at all. And so just in case you're wondering, a lot of people have had questions about this in the past. We have talked about this a few other times on the show, including episode 72, all the way back from 2017, Dan. We talked about busting options expiration myths. That's a good one. Episode 64, settlement myths and misconceptions from 2016. And more recently, episode 169, the mysteries of special dividends from January of 2022. We talked about it there. So if you want deeper dives into this, why you should or should not exercise, these are the ones. You're right, the put side is pretty straightforward as well. The only time is really, it's some weird aberrant scenario. It's maybe some short sale restricted stock, things plummeting in the after hours, and you have some puts, and you realize, I can't get short any other way. I just got to exercise these things. Then that's pretty much the only time I think you'd really want to do that. All right, let's keep on. Unless anyone's got, have you warmed you up? Have you woken up after the Portillo's lunch that Dan? He always feeds you full of heavy beef lunch right before it's showtime, and everyone's half asleep when we walk in to do the show. Let's go to Michael here then while you folks are mulling over some cues. He has a question about options volume. He says, are Mark and Dan surprised that options and futures volume has remained so robust through the summer? What do they think is driving this interest, and what is traditionally a seasonally quiet period for the markets? Well, as it so happens, Michael, you are lucky. We have the numbers hot off the presses from our friends over there at OCC for August. And, August, not traditionally a banger month for options, right? Pretty quiet. It's usually one of the two really seasonally quiet periods for volatility, that and mid to late December usually being the other one. Not a lot of volume, not a lot of volatility, not about anything really going on in the dog days of summer. That's why they call them that. But this August, blowing the doors off. Our second 1 billion contract month, Dan. Pretty much exactly a billion. 1.02 billion contracts total for the month of August. So I think March was the only other 1 billion. I think that's number one still. I'll have to go run the numbers to make sure. But so this is probably the second busiest month in the history of options, and it was in August, which is just weird. A couple of bright spots. Equity options actually down 1.6% from this time last year. ETFs blown the doors off, up, it looks like almost 100,000 contracts, about 90,000, up 29%. Index options, I think we're going to come back to this. Index options up 41.4%. I wonder what could be driving all this index options flow. And then again, total volume up about 12% from this time last year, including futures. VIX futures have been in the toilet forever, and they were up 24.7% in August, from 4.4 million to 5.5 million. So even VIX futures, which doesn't seem like they could catch a bid at all, have been on fire. So I think this has been an aberrant August, just about any way you cut it, right? We had Jackson Hole, we had a lot of Fed action, a lot of whipsaws. I haven't seen this many whipsaws in the market in a while, too. It seemed like for the first half of August, every day we were up 0.5%, and then by halfway through the session, we were flat, and then by the end of the session, we were down 0.25% or 0.5% again, and that continued day after day. And one thing we know, SPY and VIX options at least, they like themselves a little bit of whipsaw action, right? So I'm sure that didn't hurt either, just driving all these. Look at the VIX futures. That's just that's a crazy number for August. So Mr. Dan, what do you have to say here for Michael? What do you think is driving this interest during a traditionally quiet period for the markets?
Well, if you follow the financial media, there's a lot of butting heads from, Goldman says, hey, we think there's, only a 15% chance of recession now, like they're getting more optimistic. And then you hear someone else from one of the big houses getting more pessimistic. And that's kind of been going on for a while. And I think that when you have, that sort of guidance kind of going both ways, and you hear Michael Burry shorting the markets and just people talking about very, very different views on the yield curve, right? That people need to use options to hedge. And when you get this volatility, even though the VIX is lower, some of the stocks are moving, options end up being a much better vehicle for speculating under these sort of circumstances, I would say.
Let's do a quick sentiment poll here, just out of curiosity for you folks here. Let's say right now, end of the year, S&P, how many of you think it's going to be higher at the end of the year? Oh, most of you. Okay. Wow. So only one vote for lower. One vote for lower. Wow. So a lot of bulls here. Dan, the Portillo's be fired up about upside in the market. Did every Italian beef come with one share of Portillo's stock? That would be It's interesting. So you folks are every time we poll our audience, they're overwhelmingly bearish on this market. So you folks are kind of a bit of the outlier. I would say it looks like about 85% of you are bullish, which is interesting. All right, unless you have any other questions, we're going to keep on rolling here. Oh, go ahead.
What are your thoughts on automated trading, whether it be bots or algorithms?
Mm-hmm.
That's interesting because I could see a use case for those with stocks, any of that Delta One stuff, futures, stocks, easier execution, the slippage isn't there. I don't want to say the degree of nuance isn't there, but the difficulty of execution certainly is easier. You can buy and sell a stock pretty easily. Hit a bid, lift an offer, future, same deal. Options, especially for some of the stuff I think Dan's teaching you guys, getting into a little bit more complicated, certainly spreads. That execution is challenging. People hit us up, as you might imagine, all the time. We have this, the secret to whatever, the secret to making all this money with this automated. I've yet to see many that really can outperform someone who's been doing this for a long time and has a decent knowledge base in whatever product category. Maybe it's vol maybe it's futures options, maybe it's whatever, maybe it's broad-based equities. So I haven't seen a ton of them. Certainly the ones that they're marketing to retail aggressively, saying, "Hey, give us access to your trading account and let us run your trading for you." I'm always a little leery of those, but I think I'm a skeptical person by nature as well. Now, Mr. Dan, is there an MTM auto trading program coming anytime soon?
There's not, but I've been trying to automate more things. We've got the Genius scanners and we've got stuff like that. I would say, in theory, I love the idea of automated trading. I just haven't figured out how to do it. Because if you can take a well-run business, right? McDonald's, arguably, maybe not the best burgers in the world, but a well-run business, right? Like their kitchens, it's just the timer goes off, you hit this button and flip this, and it is all as automated as you can get. A little bit of human interaction, but a well-run business is run very, very automated, because that takes away the emotions, that takes away I'm in a bad mood today, I'm going to do it differently, or over-optimism. So in theory, I would love to be able to automate something just so that I'm always doing it very consistently and very unemotional. But I've yet to be able to come up with a pure black box model where it's entirely automated.
Yeah, that's different if you develop it yourself too, right? Then you can inherently, I would hope, trust yourself. You're living by some rules, some metrics that you've established. And if you find some way to automate that, it might be just as simple as saying, "Hey, I've run my models on this particular option. I want to get out at this level, and I'm going to work my stops to get out there." It doesn't have to be elaborate. It doesn't have to be some crazy algo. This is where I think I'm happy getting out, working my stops here. Maybe I want to buy more at this lower level. Then whether you realize it or not, you're kind of working an automated system there as well. It's kind of bootstrap way to do it. But I think for a lot of people, that's all you really need. Maybe in some scenarios, maybe, Dan, you're talking about your systems. Maybe if you're doing something specific like, I don't know, like your credit spread or something, and maybe you're giving people specific entry points and exit points, then maybe in that sense, if there's a system that you like, it's a person you vetted, you think they're reliable, and maybe for some reason you're not available today to put those orders in yourself, then maybe it might make sense to have that maybe hook into your account and just be able to exit for you at the right time. I still think you're better off for most people just kind of managing it yourself, saying, "Okay, here's when I want to get out," and being able to execute that yourself. But I think there are scenarios. Have you encountered any that you like or are using?
Options out first.
Yeah. There's not a ton. I mean, there's people out there marketing a lot of algos. What you usually see, it's really at the end of the day some sort of underlying model they're looking at here. We think this underlying is going to pop, and then here's a spread we recommend on top of that to maybe capture that. That's what the lion's share of what I see out there. Dan, is that what you?
Yeah, I mean, I haven't seen many fully automated systems. I know there are some, but I'm super skeptical. Yeah. Also, like Mark is.
Healthy skepticism. I think after being in these markets for a while, it has bred in a healthy skepticism for anyone who wants to get their hands in your brokerage account. Be leery for obvious reasons. This is an interesting one. This is coming up a lot as well now, Dan. It came up one of our pro Q&As just, I think yesterday, just with Scott Nation, someone asked something similar to this. I guess it's the box spread season again as well. This comes from NCT from San Fran, so I guess we know where they're coming in from. They say, "Can you discuss box spreads, the use case, the reasons for them, and also any surprise risks would be helpful as well." Well, you're lucky, NCT from San Fran, because we have discussed this in the past. If you dig into our archives a little bit, again, the show's been running for a long time, I get it, over a decade, so it may be intimidating to go through the archives, and some of your platforms may limit you to the most recent 25 or 50 episodes. So you might have to search a little bit. If you want to dig in to the archives, the best way to do that, San Fran, everybody else, our website, theoptionsinsider.com, all shows, every show we've ever done since January of 2007. It's all there, including all the stuff for Options Bootcamp. And if you go look for episode 209, we just did it last year, Dan, October of last year. It was Repair Trades and the Madness of Boxes. So we talked about it there. And we also did way back in the dark days of 2020, Dan, May of 2020. Who can remember? Madness of 2020. It was episode 86. It was called Beware of Box Spread. So we have 2 full episodes all about the nuances. I remember, I think that one for 2020 as well, I think I was surprised at how much traction, because you thought box spreads is the most boring thing on the planet. And for whatever reason, everyone and their mother was obsessed with boxes. I didn't understand it. I still don't understand it to a degree. But Dan, really quickly, 'cause we already kind of touched on these already. But if you have any 10,000-foot thoughts on use cases for boxes, risks, anything along those lines, have at it.
Yeah, I mean, like, they're basically just a way to borrow or lend money. Typically, is the main use case, because you're basically buying a synthetic stock at one strike, selling it at another strike, and so it's worth the difference between the strikes minus the interest rate. The discounted by the interest rate. And like, there was a guy when I was on the trading floor. There was a guy who was a smaller trader, and in order for you to be able to trade stuff, you needed cash in your account. So instead of putting in sweat equity or going and borrowing money from a bank, you would just walk into a pit and say, hey, I'm selling these boxes, and he'd give up a penny, and everybody was happy, and he'd walk away with another $100,000 in his account that he effectively borrowed. So to me, that's the main case, but there can be some surprise risks, especially if you hold them through expiration and like you end up getting assigned on just one of the puts and not the other one, and like all of a sudden, I'm long all this stock, and it just happened to open 10% lower today. So you can there's always a way to get in trouble.
Especially for retail. These are not very retail friendly. All the examples I have, all the ones you have, are from the trading floor when we all had professional accounts and there was a lot more margin friendliness to do this. There's no use case I could think of really for retail, because you can't borrow at the same rates. The spreads are going to kill you. It would be a very expensive transaction, I think, from a slippage and everything else, plus not commissions. Yeah, so retail, I don't see the use case, but if you're intrigued, NCT from San Fran, episode 86 and episode 209, deep dives into the dangers of boxes. This last question is kind of a fun one. Maybe people here can answer it for me, because I don't know the answer. The question comes from Side Theta, and they want, very simply, I like that too, Side Theta. Is that like your side hustle, a little bit of Side Theta on the side, making a little bit of, you have a regular day job, and then your side job is collecting some Theta. I like that. It's actually a cool handle. I like that. You got the Handle of the Week award there, Side Theta. Side Theta wants to know, why do you think iron condors are so popular? This is the question I've asked myself, I think, since we started this thing. So way back in 2007, iron condors were hot then. They're maybe a little bit less hot now, but they seem to have had a steady amount of popularity. I would say of all the spreads we hear about, that's definitely up there, even still to this day. Seminars, webinars, people hawking guru newsletters. Iron condors are certainly up there. I mean, show of hands, anybody here trade iron condors? You all do. So maybe you folks are the ones to answer. Yeah, today you did. Why do you like iron condors so much? What is the attraction? Is it the limited risk? What is it?
It's absolutely identifying a fixed risk while using a different variety of charting techniques to pick your range and let it rip.
Is that the same for all of you? You like kind of the limited amount of exposure you get? Like an iron butterfly, that's too crazy. You don't want to go that far, right? We used to have a guy on our network, he used to say, the iron condor is an iron butterfly for cowards. That's what he used to call it. And I always thought that was an hilarious description. You don't want to go that close to the fire. You don't want to go the at-the-money straddle. You want a little bit of cushion. So that's what the iron condor, is that why you guys like it too? You said you like them too, right?
Yeah, I think it can have the risk. Mm-hmm. I guess that's the way I think. One side has to win. Mm-hmm. So if you're limited on your buying power, you limit yourself to your buy, you can get double the bang for your buck.
Yeah, I mean, so you guys do a lot of iron condors in the MTM system?
Yeah. We Wing Spread Genius identifies some of them, and John found one this morning in Google that we liked.
And also, I guess, the bi-directional quality. If you're just picking a regular call spread or put spread, you're kind of putting all your eggs in one basket, right? But with the iron, it gives you kind of two bites at the apple at the same time, right? So I can certainly see that. For whatever reason, it is popular. It remains popular. So there you go, Side Theta. I like the handle. Now, there's a lot of moving parts to it, too. Obviously, you have four legs, so, how you take it off, that could become a whole other, you could take a good trade and turn it into garbage or vice versa. So it's not as simple as it might appear on the outset. When you guys put them on, do you take them off as a unit? You take them off, whatever side is winning, you take that one off and let the other one run? Or how do you guys normally take them off when you have these iron condors on? Together? All of it? Okay. So get in as a unit, get out as a unit. Does keep things simple. So yeah, any other thoughts on why iron condors have remained popular since time immemorial?
I mean, I kind of probably tying together what everybody else said, but even though they're four-leg strategies, they're like the straightforwardness of them is great. If it's between here and here, it wins. If it doesn't win, your risk is limited. Like, there's the game. That's it.
I prefer a good ratio iron condor swap myself, so you 1x3 on the outside.
Yeah, different expirations on each leg.
Yes, exactly. Every leg. I forgot to say time, a ratio time iron condor. So you got every moving part possible, and you have to monitor it all during the day. That's fun. All right, that was a fun one. A lot of great questions. Any other pressing questions before we roll on in here? All right, Dan, that's going to do it here for our mail call today, live from Market Taker. Hard to believe, or Market Taker. Live from Mastermind. Hard to believe it's been a year. Any other last thoughts you want to leave them with? Or maybe what if folks are intrigued? You have one more Mastermind coming up, or is this it? This is it. So I guess they want to join you next year for Mastermind. Give them a little bit of a hint, a little bit of a tease of what they could expect.
Yeah, so we do this once a year. It's typically around this time of year. Next year, I believe we're going to do two in two different locations is what I'm thinking, but we'll have to see. So, visit us at markettaker.com, join our list, and you'll get an email about it one day.
There we go, markettaker.com. Don't forget the second T for Theta. Market Taker, 2 T's over. That's going to do it for us on the network today. So just the one show today. Back again tomorrow, noon Central. Actually, maybe from here, we'll see. For the option block and with the friends at Cboe. And after that, 1:30 p.m. Central for This Week in Futures Options with our friends across the street over there at CME. Then Friday, of course, volatility views at noon Central. And after that, for all the pro folks, we come back one final time to cap off the week with Options Oddities, where we look back at the whole week worth of unusual activity and find some usual fun trades to get into. Then we're back again next week, all the way through to next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.